Good afternoon, traders. This is Christian from Hertz Market Trade Group, and today is Monday, July 19th, first day of the week. Obviously, there is a bit of volatility today in the market, but we did come back off those lows there at the end of the day. Risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only. If the screen is a little bit blurry, just give it a little bit more time. YouTube does take a while to render the high definition version of the video. So in terms of performance, S&P was down, finished the day down 1.4%, right? Let me just double check that. Yeah, right around 1.4, 1.5%. It was down around 2% from the, at the lows of the day. So we did have a comeback there at the end of the day. IWM, same thing there. That finished down 1.4%. I'm going to go through the technicals of all these. The diamonds were the ones that really got hit the hardest. So Dow Jones stocks, again, price weighted index, down just about 2% for the day, and the Nasdaq outperformed a little bit better. Growth outperformed a little bit better today than value today. I think if you look at those two ETFs, VUG was down 1.2% and value was down 1.8%. So let's go ahead and look at the technicals in the S&P. We'll talk a little bit about what I try to do on days like this. I often find that when we have volatility like this, that's kind of was showing some signs towards the end of the week. Obviously, we had a number of warning signals over the last few weeks. The breadth was a surefire tell sign that was going on for about 3 weeks, that we saw declining breadth. And I think just about everybody knew at this point that what breadth was doing over the last 3 weeks was a pretty bad sign. But once we get a volatile day like this, I always go to the same playbook, right? There's always different reasons why there's a market pullback, why there's a dip in a market, but it's always kind of the same in terms of if you're watching the price action, right? There's clues that you could basically watch throughout the day, and what I look for, places that I get more aggressive, places that I back off, So number one, one of the things that I look at, of course, is the price action. So let's dig into that, and then I'll talk about a few other things. But what I did want to see was us to hold the 50-day moving average in the top of value for the month. Remember, these are value areas. They're based on volume at price. So if you look at this market profile, what we find is that when we do make them statistically relevant by making them about one standard deviation, that is the value area for the month of July, we come up with some really significant levels. So we did close above that. So 4246, right? That was something that I said in the beginning of the day. We did get down there. I think when we were originally talking about pre-market, that that could be something that we take out, and we actually went further. We took out 2 virgin point of controls to the downside. Again, virgin point of control is an area of high volume that has not been revisited, right? So you got this one taken out. This is from this market profile from this week. And then you also had, and sometimes when these things are pretty close together like this, they will get taken out. It's easier for price to seek them out. So this was the virgin point of control, this red line from this market profile. Again, the highest volume in that period, right, or where the majority of the volume occurred at price, right? So notice that you took another one out to the downside, right? We went a little bit further, but you could see the bounce. And again, I put this level out. I did say on Twitter, I said 42, I think I said 4236 or 4240 as a potential bounce spot. We did get that a little bit, basically right when I said it, and then obviously we went a little bit lower in the afternoon to come back. But I'm pleased. That's exactly what I wanted to see happen in terms of the price action. There's also, when you look at the smaller time frame, like the 5-minute time frame, you're going to see that one was taken out here too. Again, there's just different time frames, so that when we look at the daily chart, we're looking at a month of data, right? So each value area represents a month. When we look at the hour chart, which is what I was just on, we're looking at a week. Each value area, it covers a week, right? And then when we look at the 5-minute, each value area that we're looking at here is just a day. But There are virgin point of controls that carry forward. Notice that we did take out this one right around 1245. There is other ones that live lower down here, but the further that we get away from these, there's less like magnetic force, if you will, that makes these things significant, right? So the farther we get away from them, the less chance that one gets taken out. The closer that we get to one, the higher the probability increases that we do take that out. So again, this is pretty good. Since we're talking about the S&P, I want to talk a little bit about the VIX. Let's look at the VIX on the daily chart. As I mentioned in Friday's video, I said, well, the one thing that was pretty decent was that this bar on Friday was not a higher candle. But I said it was a little bit too early to tell if that was all that we were going to get. It's tough to make that determination. So we did get up to that level of like 24, 25, but we came in, and we'll see if that's what we get. We did get above this last little peak of volatility, but overall, if volatility starts to come in tomorrow, this could just be another garden variety of market volatility. Just something to kind of realize that again, that the markets don't always go up; they do go down too. So from time to time we get these bouts of volatility. I don't know. I'm leaning on the side that could be it. Because I think that we're short-term oversold. Now, again, that means that we could have a bounce tomorrow, and we could see more volatility, the rest of the week and a little bit the following week, because it is what it is. We are in earnings season, right? So you just kind of take one day at a time. You read what the market is telling you. And another thing that I wanted to mention too, let me bring back the S&P chart. And I want to go over the 5-minute chart here just for a second. But if you look at the market breadth, right, it's one of the things. So this is our market breadth indicator. Opened up really negative. It came back pretty nicely. We had that bounce around 11:30. We just didn't get any follow through, and we actually took out the lows. So that was a little bit concerning. And again, this market market always likes to throw you off a little bit. But I did like that the market breadth improved a little bit at the end of the day. All right, so I'm viewing that as a good sign. And NASDAQ, or if you want to look at the Qs, we could look at this chart too. This actually held the 20-day moving average. Right, so I know more people look at the Qs than NASDAQ futures. This one didn't. Interesting. I don't know why, but the Qs did not hold the 20-day moving average, but NASDAQ futures did. Right, so again, heavy volume always on distribution days. Again, VPOC being taken out, 2 VPOCs being taken out, I think there, and we are back above that. Right, IWM, which had a healthy bounce, but if you look at the 1-hour chart, notice where, and this is something I also put on Twitter in the middle of the day, I said just be mindful that we hit this 213.70 level, and it really takes a big bounce for us to overcome and get back into value, and sometimes it takes a number of attempts. So that's a level that I would watch for tomorrow, 213.70, to see if these small caps can reverse a little bit. Right, coming off of pretty oversold levels. Right, if we want to look at the IWM2 on the daily chart, one of the things that is interesting to me is we're down basically to the 200-day moving average after a decent decline. So when we start to kind of look at some individual names, let me just go over sectors really quick here. The best performing sectors, biotech kind of stood out like a sore thumb. Also, the ARK fund stood out today too. That actually ended up 60 basis points. So part of that I think had to do with interest rates too. We didn't really talk too much about bonds, but another big move for bonds. Again, they did finish off slightly of the highs of the day, but another move higher, up 1.3%. And yeah, I mean that's a little bit risk off, but lower yields is a good thing for high growth stocks. So ARK that was present like very early in the day that this ETF was coming back. It had a number of outflows last week. I think it was about 500 million outflows last week. I put this out on Twitter earlier as well. You could see that in the 5-day ETF flow tweet that I put out. But nice reversal today. And if you look at the names that did the best, it was actually Teladoc, Shop. If you look at the Shop chart, there's a lot of charts that look like this in growth land. All right, so like I said, we'll begin to kind of go through here. But you could see, a move down and kind of catching back up with the moving averages. I saw this in a few different places. I traded Net today. Was one name that I traded. Just bring up this chart here for a second. This is a little bit cleaner, I thought. Still has to get above value, but also ASAN had a nice day too. Notice up 3% today, in a bad tape. So there was a lot of growth names that performed pretty well, and the dip was bought in some of these names. So this one was a nice name. A trader in the room at Tribeca Trade Group brought to my attention BNTX had a monster day on good volume too. Of course, Moderna, which is best of best right now in terms of the vaccine, closed at 317, got a high of 317, closed at 313. So monster move in Moderna. Again, what usually happens when a name gets announced that it's going into the S&P, it's usually a sell the news type of event, but obviously there's something different going on here. Not only do you have that going on, but we're getting all this information about the Delta variant, and it seems like the Moderna vaccine, as well as I think the Pfizer one, is just much more effective than some of the other ones. For example, AstraZeneca. Again, I'm not an expert on this matter, just stuff that I read. So you got a star obviously in this one, given what how much this Delta variant virus is spreading. See, I don't know what I'm talking about with this stuff, but I just stay in my lane. But it is what it is. I think this is what's really driving the name and the performance in some of these names. All right, so that was notable. And then if you go through a few other names too besides Net, what else do we have on our watch? Net was one of the names I had on the watch list. Also, Snow was one that I put on the watch list for this week. This did finish positively, right? Back above value. So you could use this 250 level if you want to trade off of that. ZS was another one. I didn't want to trade all of these things, right? Like I said, another chart that looks very similar to the Shopify one, as well as the Cloudflare one, Net. So again, you kind of had to pick and choose, in my opinion, through this group. I also traded a little bit of Tesla. Tesla, we did see some call buying, and I just like how the 1 hour chart lined up pretty well. The 642 level on the 1 hour chart, also on the 5-minute chart. It had a little barrier to get through, which was 643. So you could see it's trading up here a little bit after hours too, which is a good sign. But I like the way that it looked, and I was pretty patient. I'll show you the trade blotter in just a second. So I mentioned that that when we get volatility like this, I do go to a playbook. And I basically am checking some boxes off for what I want to see. Notice what I did here. I got into an Amazon call spread, which I think also Amazon, if I didn't mention Amazon in this video, I apologize, but I like where it closed. It closed above value, so held in there, held the breakout level. 35.18 was the level that I wanted to see this close above. It did. So, but that was one of the first things that I did. Other than that, I traded a lot of, I've made mistakes before on dips where sometimes I buy a little bit early. And if you do that with options, and if you buy a little bit early, you could really dig yourself in a little bit of a hole. So I actually just bought some S&P. I just bought some SPY. I bought some Qs. I'm still holding some of the Qs after taking a target. Snap was another name just for a day trade. Snap reports later this week, but it was pretty oversold in the short term. So I took this, and sometimes I'll do this, right? If we get that first bounce during the day, I make sure that I take a trade or two off that I bought. If I bought the dip, I take one or two of those trades off, and then I see where we're going to go from there. Right? It just takes a little bit of experience realizing that sometimes that first bounce, like we had at 11:30, sometimes it just doesn't carry through to the end of the day. Sometimes you have a little bit of a retest of the lows, or like today, the S&P actually took out those lows. Net was a name. I'm still holding a portion of that. I mentioned Tesla. I went long a little bit of IWM right at the end of the day. I actually took a target in that because you could obviously trade the ETFs till 4:15. You could trade the ETF options 15 minutes past the regular close. All right, so that's it. I mean, you could see that I did kind of once I saw that we lost that bounce, right, and got out of some things like the snap, and took another target in net, I kind of just backed off. You didn't really see me do too much trading until the end of the day. Another name that I'm watching too, which I thought really held up well, was this INMD. Right? Remember, this thing had preliminary results, gapped up, sat back into the 5-period moving average, and up on a negative day. So relative strength, which is generally what I try to look for. One other thing that we talked about, I know if you're not a member of Tribeca Trade Group, you're not going to receive this. I put out the macro video, not last weekend, but the weekend before. I did not do that this weekend because it is for members only. But one of the things that I mentioned was just to kind of be careful with the move in the low volatility equities, which were really, really strong last week, right? We saw XLU, utilities, XLP, consumer staples, and look at what these did today. So I mentioned, I did not want to chase the move on in some of these low volatility names. And you could see what happened today. The utilities were down 1.6%. So you couldn't hide in those names. And, I think I made the right decision. I had on a small trade in long SPLV, short SPHB, which I mentioned this trade idea in the room last week. But, this was not a place to kind of say, in my opinion, after several green days of XLU, you got to give these things a breather too, right? Sometimes you can't hide in these things either. So I came into today because I didn't want to buy any of those things at the end of the week. I came in today pretty light, and again, that always allows me to be very nimble, and play offense today. I was more playing offense today than anything else because I did the right thing. Now, I wish I held a lot of puts into today, but I didn't. I made a conscious decision to either, the choice was either to buy a hedge, right? S&P, Qs, IWM, something of that nature, buy some puts in those, or just reduce my exposure. And what I did last week was just reduce my exposure. Either way, it really doesn't matter that much what you do, right? If you kept on a decent amount of exposure and you bought puts, right, you're going to lose some. That's why they call it a hedge. You're going to lose some on your long portfolio, but you make up for it on your puts. I just chose to take off more of my long exposure, right? Well, I guess some people also reduced their long exposure too and added some shorts. That's fine too. But I think that was the way for me to do it, was basically just reduce exposure so that I was able to play some offense today with the market tip. All right, guys, that's it for today's video. Have a great night, and I'll see you tomorrow.